Money Show, Stephen Grootes, is brought to you by ABSA CIB, backing the Ideas Fund by advancing capital to African infrastructure investment managers.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, backing the Ideas Fund by advancing capital to African infrastructure investment managers. Good evening. Welcome to the program. I'm Stephen Grootes. A day, I suppose, in which, if you are at all interested in money, if the phrase "the rand" means anything to you, you might have been spending a little bit of time watching the Constitutional Court and the currency manipulation case. And I have a horrible feeling that this is one of those cases that is so bogged down with technicalities, you come away from it thinking, unless you have one of those degrees or several of them, you come away thinking, what on earth is going on here? People kept using the phrase peregrini all the time. I had to look it up. Apparently, it is from ancient Rome, and it means a group of foreigners. So a group of people who, in other words, they're referring to the foreign banks is really why the phrase kept coming up. But it means sort of different groups of foreigners was my understanding. If you did Latin, I did Latin until, well, I would say grade 10, but I think deliberately let me say grade 7, let's standard 7. Then maybe you know a little bit more than I do about all of it. The problem, of course, is that the rand manipulation case has been so abused by politicians, it's come to mean something completely different to what is actually alleged. And this is where it gets very messy. We'll talk more about it in just a moment. I think it's going to be an important conversation. We'll speak to Kokkie Kooyman from Denker Capital. We'll speak to Harry Scherzer from Future Forex as well in just a moment. We've been hearing the phrase business rescue from time to time, and I do worry we might start to hear it a little bit more. Dr. Eric Leventin will talk a little bit more about that, why it matters, and just how it sort of, plays out. He's at Weber Wenzel. Markets, of course, quite a few companies sort of putting out results, giving us certain indications. We'll speak also about Eskom and solar electricity, and then also what the end of kind of U.S. exceptionalism, one of the big dynamics of the last 20 years, really, certainly the last, call it 13, has been the amount of money flowing into the US. That seems to be reversing now. And now, what does that mean for emerging markets like us? That's one of the questions tonight. I know you will have a view, of course, around what's happening with the currency manipulation case. You may well believe the bankers are all in it to get us. They kind of are. Or you might well believe, actually, there's nothing to see here. Why are we giving it so much attention? 011 883 0702 021 446 0567. Good to hear you on voice notes as well on 072 702 1702. You might have heard what happened with Anglo today. Peabody Energy was going to buy their steel-making coal business. There was a fire at one of the mines, Moranbah, and now Peabody say they're pulling out. Anglo say, we do not want you to pull out. We want to sell this to you. It reminded me a little bit of what happened when there was this company called Twitter. Elon Musk said he was going to buy it. Then he said he wasn't. In the end, he was forced to buy it. Do you remember what happened after that? Well, yes, plenty of things happened after that. But has anyone ever reneged on a deal with you? Maybe they had a good reason, or looking back at it, a bad reason. But I wonder if you've ever, been about to rent a room from someone, or about to sell a car to somebody, or about to do something, and someone just pulls out of it. How did it end? I'd like to hear that story on The Money Show tonight.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, you would have heard in the EWN bulletins through the day the arguments in the Constitutional Court, the case brought by the Competition Commission against several local and international banks. The Commission is appealing a Competition Appeals Court ruling that essentially said our courts don't have jurisdiction to hear the case because the alleged conduct did not happen in South Africa. It's actually infinitely more complicated than that. Several cases are being heard all at the same time here. Almost all of the banks have strongly denied any currency manipulation. You might remember Sim Chabalala from Standard Bank saying a couple of years ago he will not settle because none of his people did anything wrong. I was sort of quite impressed by the strength of the denial in that case. We start tonight with Kokkie Kooyman, the Executive Director and Portfolio Manager at Denker Capital. Kokkie, good evening. I really appreciate the time. Thank you. There's a lot of technicalities in this case, but for South Africa, for the banks. What's at stake here? There are obviously a lot of reputations on the line.
Yes, no, indeed, Stephen, and it goes back to as long as 2007. So the Competition Commission, in its original case in 2017, alleged that the banks conspired from 2007 to 2018 to basically manipulate the rand and to set different price fixings. They use the term an overarching conspiracy, and that case was unfortunately poorly presented and poorly prepared, and was thrown out, and the tribunal at that stage, and been actually quite a fair number of cases again afterwards, but basically they were sent back to the drawing board, and this case coming now, and that started today, is basically rehearing the arguments. But the key of it is that they say that banks conspired using Bloomberg chat rooms via WhatsApps or telephone calls to fix prices and change the value of the rand. Now, just by the way, the number of trades and the volume of transactions in the rand dollar is so massive, it's impossible for banks to permanently change the value of the rand. So, but I think and what I've heard today and what I've seen is there were a lot of cases where obviously they can prove that traders of the various 28 banks were agreeing on a price. Now, but that could be the same as I'm trying to buy a share, and I phone my broker and I say, can you get this share for me at this price? And he phones his opponent in the old days when this was also manual and says, I've got an offer for this price. Do you agree? And, they settle on a price. The Competition Commission says that this was price fixing. But not only that, it says that the 28 banks acted in a cartel. Now, that is very difficult to prove, that they were all acting in concert knowingly, trying to change the value of the rand. I think they should have gone for individual transactions and proven on individual transactions that, where price did deviate from the normal price during the day. And then, as you say, the final one is the foreign banks are obviously saying that, but hold it, we are not, you can't test us, you can't prosecute us because we are offshore banks. So there's a lot of complications here, and this is 4 days of hearing, so it's going to be interesting to what comes out.
Just to understand this, as I understand the claim, there's no accusation that the point was to lower the value of the rand. It seems to me the accusation is you agreed on a certain level of the rand for our own purposes. This wasn't about making the rand weaker over the longer term.
Now, that was originally, a lot of it was alleged, and I think also Kevin Wakeford was used in many of the cases, but you're quite right. I think at the moment it is just that they actually changed the pricing to their own benefit. In other words, the rand was trading at 17.22 to say, well, let's fix a price at 17.25 and we pocket the difference.
Kokkie Kooyman, thanks very much indeed. Executive Director and Portfolio Manager at Denker Capital. Listening to that, Harry Scherzer, the CEO of Future Forex. Harry, good evening. So some banks have pled guilty to this wrongdoing. Their traders were involved in these chat rooms doing this. If I recall correctly, I think ABSA actually found 2 of its traders doing this, went to the Competition Commission and told them. But if this was happening here, could it be happening in other currencies and other places? I mean, was this the only time in human history it happened?
Good evening, Stephen. Great to be on. It's a great question. I mean, I'd be absolutely amazed if it wasn't happening in other places. But I think what's really good about the Competition Commission in South Africa is that we're actually doing something about it. So we could have swept this all under the rug and maybe taken a back of the envelope bribe or something like that. But that's not what our Competition Commission has done. They've actually launched a proper case, made it public, which if the banks are found guilty, I think it's a really, really good sign that we do have working regulations in this country, and you can't simply mess with the South African government and get away with it. So even though it's more than 12 years later that we're actually getting a case together or a strong case together, I consider it a really good thing that they're not sort of sweeping this under the rug, given it was so long ago, because it sets a precedent, right? If you do sweep it under the rug, then people will come to South Africa, do whatever they want. It'll become the Wild West, and we don't have a good financial body.
I mean, it's quite a big if. I mean, I agree with you, but it could also go the other way, and the Competition Commission might look, well, a little silly. And some of the banks have been sort of quite terse in their language on this.
Yeah, absolutely. The banks have undeniably denied this. They've denied this entirely. That said, we did see a couple of years ago, Standard Chartered paid, I think it was a 42 million rand fine and admitted guilt. And over and above that, we know that there were these private message chats. It's just around how bad they really were when push comes to shove. But we know something did happen, otherwise there wouldn't be a case here. It's just if they can find the banks guilty of it and which banks are. So you're right, it is a risk by the Competitions Commission, but you'd suspect they've got enough there to make a case, particularly given Standard Chartered said they will testify against other banks, they will pay the fine, and they will admit guilt.
There's such an interesting question about what happens if it turns out our authorities can punish conduct involving the rand that happens in other places. So I obviously support the idea that wrongdoing should be punished. I mean, and I feel especially if it's our currency. But that doesn't mean that we necessarily would find it very easy to investigate what's happening in New York or Hong Kong or Moscow. Now, you could argue the US is able to protect its interests. We should be able to do the same. It's still incredibly complicated to do that if people in other countries are messing about with our currency. I mean, proving it is tough for a start.
Yeah, you're 100% right. It's a really complicated situation because for the local banks, it's a bit easier because they're positioned here. It is the rand. We should do something about that. When it comes to foreign banks, it becomes a bit more complicated, as you say, because they're not based here, but they're trading our currency. And so I suspect there would be a way whereby we can work with the authorities of the countries that they're based in to say, look, they do need to pay a fine because they've messed with our currency, which has influenced our GDP, our businesses, our people. So I do suspect between the two countries, wherever they are housed, there is probably something they could do. But as a very easy starting point, it would be targeting the local banks who are housed here and basically say, you guys are allegedly involved. If we can prove that, you need to be harshly punished for it.
Harry Scherzer, thanks very much indeed. CEO of Future Forex, you at The Money Show, 21 minutes after 6.
7:02. Stephen is on The Money Show.
6 to 8 p.m.
I don't know how you feel when you hear the phrase business rescue. I mean, it kind of implies, I don't know, that the post office is in trouble again or something like that. I do worry that we might start to hear the phrase a little bit more often. We have a slow economy. We have problems with US tariffs. There's a little bit of trouble down the track. Dr. Eric Levantine is the head of insolvency and the business rescue practice at Worksman's Attorneys. Eric, good evening to you. I know people who run companies want to believe that their companies are going to work. It's almost in their nature. They're very optimistic. Is there a definition of when a company must enter business rescue? In other words, is there a point by which if you don't, you're actually behaving, to use a legal phrase, recklessly?
Yes, good evening, Stephen. And I think that's exactly right. I mean, the test is always financial distress, and people don't really understand what that means. But the Companies Act is pretty clear. You can't pay your debts as a company in the ordinary course of your trading business. Then directors have to take a good, hard and cold look at where they're going. Are they able to continue to trade, or should they be taking advice in relation to a possible business rescue filing? So the tipping point is financial distress. If you, for example, have to pay your creditors on 30 days, 60 days, whatever that might be, if you're not meeting those obligations in the ordinary course of business, then yes, you are financially distressed and you've got to look potentially at an intervention.
What happens if you just sort of deliberately ignore it? Maybe you go into business rescue too late, or it's too late for business rescue. I mean, people who pretend it won't happen, what happens to them in the end?
So really the directors of companies have to understand their fiduciary duties. They've got an obligation to act in good faith with level of skill and due diligence that is required of directors. And we often see in small privately owned companies, particularly when the company's been handed down over generations, people do not want to admit that things are not going well. Maybe they're an export business and tariffs are really starting to hit now. And they just trundle along and don't really understand whether or not they're in financial distress, and maybe even ignore it, where there's mounting evidence of that position. So directors who ignore that can be held personally liable for reckless trading, for trading in insolvent circumstances. The provisions in the Companies Act are quite clear as to whether or not you should be taking on debt knowing full well that you can't pay it back. There is also a case potentially for fraudulent conduct in those circumstances. So it's something that should be taken quite seriously by directors of companies in South Africa.
People don't go into business rescue partly because they think that they'll be able to trade their way out of it, but they also don't want to lose control over the company.
Correct, and that's exactly what business rescue does, is when the directors decide that they need outside independent intervention, they appoint a business rescue practitioner. They have to hand over the reins to that individual. Directors are sidelined to an extent, even though they continue to play a role in relation to the business rescue process. But that's exactly the point, Stephen, is that they don't want to hand over control. They remain in control and try and push off the inevitable. And that's where you have filings for business rescue far too late. And when the practitioner comes along, there's nothing much left to rescue. So many of those companies default into liquidations. We've just seen statistics come out this month, or in fact last month, for June 2025, where 150 companies just in that month had to close their doors. And South Africa has seen, in the period January to June 2025, 753 companies filing for liquidation. Now, a lot of those could have potentially been rescued if they had embarked on a business rescue process a lot earlier.
It sounds like a silly question, but it is the question that I think gets to the heart of all of this. Why would someone who's a business rescue practitioner be able to save a company when someone who's worked in the company, knows it, maybe for generations, is not able to?
So the business rescue practitioner has tools that are set out in the Companies Act. And the biggest aspect of a rescue is that you park historical debt. So all historical debt, creditors that are owed money pre-commencement of business rescue, would be able to have their debt being compromised. In other words, if R1 million is owed to creditors, they might have to accept 30 cents in the rand instead of 100 cents in the rand. So that provides a fresh start for a company exiting from business rescue, having compromised its debt historically. There are other tools available to the practitioner. They may want to renegotiate prejudicial contracts, such as prejudicial leases. They might want to reconfigure the workplace. They might look at retrenchments. They might even ask directors to step down and get new management to come in. So there's all sorts of permutations, Stephen, that a practitioner looks at, which directors are not able to use, because the provisions of Chapter 6 are quite specific. It's about rehabilitation of a company, providing it with a fresh start and enabling it, hopefully, to continue to trade into the future.
Dr. Eric Leventine, thanks very much indeed. Head of the Insolvency and Business Rescue Practice at Worksman's Attorneys.
The Money Show.
The Markets.
Mark Ifstafiel is the lead specialist for investment and trading sales at Absa CIB. Marco, good evening. Good to have you back. The Northam update from last night after trading for the day, very disappointing. Profits down quite dramatically. And the share price showed that this morning.
Absolutely, Stephen. So we saw Northam ending the day about 8% down. This was a disappointment all around. We saw earnings per share coming in well below expectations of what consensus was expecting. And I think the other thing that did surprise investors was the large cash burn we saw. Big capex being put out there, yet revenue not quite covering that. So 1.2 billion rand of cash burnt in the period as well.
I mean, obviously they're clearly betting big. I noticed BHP Billiton's doing the same thing. I mean, clearly there are people who are suspecting, well, maybe not right now, but in 5-10 years, demand for these commodities will be strong again.
It's very interesting, Stephen, because what we have seen a big rally in prices of the underlying PGMs over the last few months, But I think we got to look at the bigger picture here. All of the PGM miners have updated us over the last few weeks, have shown a very difficult environment to produce those metals. And that's very likely to have contributed to this big spike in the prices that we have seen. So we're watching that very closely. We have seen a bit of upgrading of vehicle sales coming through as well. So that could be putting a bit of upward pressure on the stocks as well. But will be interesting to see how it plays out over the coming weeks.
Harmony, they've got approval for the MAC copper deal. I mean, those good valuations for Harmony, quite something.
Absolutely. I mean, look, very, very little happening to the share price with the MAC copper deal. We spoke about it previously. I think what's really interesting for me is the gold stocks overall running up between 80 and 120% year to date, depending on which stock you're looking at. This resulted in all of those majors sort of trading well above their 5-year valuations, some even one standard deviation above that. So looking a little rich at this point, but I guess with all of the risks in the world, people's continuing to park in gold.
Peabody deciding, no, we're not going to buy your mines. Thank you very much indeed, Anglo-American. These are steel-producing coal mines. There was a fire at one of them. I mean, Anglo is saying they're looking at their options. We all know that means lawyers are about to get rich. Bad news for Anglo, though?
It doesn't seem so. I mean, the market actually reacted fairly positively initially to the news. Anglo quite adamant that they could find another buyer for this quite easily. They said it was quite a competitive sort of process going into this. So, market took it well. We saw all the miners roll over in the afternoon, but I think initially it wasn't because of this news.
Marco, thanks very much indeed. Marco Iftathio is the lead specialist for investment and trading sales at ABSA CIB, bringing the time on the Money Show to 6:30.
WhatsApp Stephen
on 072
702
1702.
Well, lots coming through, and obviously conversations too about business rescue practitioners. Fetsi and Midrand saying, you asked your guests why business rescue practitioners who don't understand a business can be trusted to rescue it. He mentioned the only big advantage that you can compromise the creditors. Why not compromise the creditors, but let the people who know the business better rescue it with no pay? BRPs themselves are expensive to a struggling company. Look, business rescue doesn't come cheap. It's really about saving the underlying assets. And I think you raise a very interesting question. I saw earlier today that Ford is recalling 20,000 cars in South Africa. And there are various things. One of them was, it seems that, when you go backwards, when you go into reverse, and you get a sort of image, you get basically the camera. It seems that sometimes it can make up an image, which is a little bit exciting. I mean, I don't know if it comes with subtitles, but it just makes up the image. Anyway, it reminded me, though, of how many different car recalls we've had over the years. And so many of them have been related actually to one problem, which is the way in which an airbag sort of deploys. I think that was from a factory in Indonesia. It's been going on for years and years and years. What's your experience been of a car recall? You've taken it to the shop. What's happened? Were you without a car for a day, a week, a month? Did you feel that you would buy another model of that car? If you drive a car that's never, ever been recalled, is that safer? I mean, or do you think they're just lying to you? 011 883 0702 021 446 0567.
702 with Stephen Grootes.
Email him on stephen@702.co.za.
Well, I wonder how you get your electricity. I mean, I put a lot of money that almost all of your electricity kind of comes still from one place. So it comes from Eskom, and most of that still comes from coal. Not all of it, though, and that is beginning to change. I do think, though, and you've heard conversation after conversation around the cost of electricity. I'm sure you've had conversation after conversation in your own home about the cost of electricity simply because it is so high. Even the electricity minister is concerned, but I don't think there's anything he can do about it. But Eskom confirming this morning, you're now able to, if you're a company, sign a contract that will essentially mean the only electricity you get comes from solar systems. In other words, you'll be able to say that your electricity is coming from a solar plant rather than from coal. Or that's how I understand it. Jose Maloshe is the energy expert on financing too. Jose, good evening to you. How's Eskom doing this? Are they actually guaranteeing the source of the electricity that you can buy from them?
To an extent, however, as you would probably know, that the electrons are electrons, whether they are green or not. But the fact that you've diversified the mix means that you do have a component that is renewable energy.
Okay, so, I mean, the way that it works is you don't really know. It's like water through a hose pipe. I mean, you might be getting it some time after it was produced. Your understanding of electricity is much better than mine. But what it does mean is that you're at least able to say you're trying.
Yes, because, they will really build those projects and they will diversify that mix. So you will have projects dedicated to this that are solar, that are based in their areas where there's coal-fired power plants and there's already transmission infrastructure. So yes, they will be building the renewable energy capacity. So indeed, it will be in the mix.
Okay, I mean, for people exporting certain products, say products to perhaps countries in the EU, for example, they might be asked by the people who are buying their products where your power comes from, and I presume it's to help people get around that.
Yes, actually, it's because Eskom will have this subsidiary, that's the renewable energy subsidiary, and they will be contracting with that subsidiary directly for that particular type of infrastructure. They can be able to claim that they have, to an extent, decarbonized their systems.
Do you expect a lot of companies to take this up? I mean, is there going to be a lot of interest in being able to say we only use solar power, even though it still comes through Eskom?
I think there will be an appetite for it. Firstly, they are targeting these energy-intensive users, which we know have an appetite for decarbonization projects. Secondly, they have a relationship with these industrial users. The third element is that Eskom has an advantage in the sense that they will be building where they already have transmission infrastructure. And some of these projects that are being developed right now, especially the wind projects, are facing transmission constraints. So that will give them an advantage to sort of be quicker in terms of developing their projects and potentially more competitive as well, because they are using existing land as well.
Well, I was going to ask about price. I mean, I can just imagine the fight that'll happen if someone is able to get a better price for for electricity they can claim is generated by solar than a company that gets a particular price because it comes from carbon.
So remember that this will be a bilateral agreement between parties that will be based on that infrastructure that will be developed. So they will have a power purchase agreement in which these deals will be worked out. So that should be able to give Eskom the ability to be competitive. Particularly, as I mentioned earlier on, they'll be using existing infrastructure, they'll be using existing land, and that will undercut a lot, and renewable energy is relatively lower in terms of price at this point.
How quickly is the electricity mix that Eskom is using changing? I mean, a few years ago, everyone was talking about we need more solar plants, we need them to happen now. We know that Eskom's grid, by and large, is much more stable than it was. Are we still seeing a lot of progress, a lot of change in how the power is actually generated?
I think we have a potential, but we're not really seeing that much, because in terms of the operational capacity in the system, it's just under 7 gigawatts or 7,000 megawatts that we have, and that is based on the previous rounds of renewable energy IPP programs. Some of the programs are obviously continuing with construction, and we will see more. But in the meantime, we still have quite a huge dominance of coal in the energy system. Remember that Eskom has also decided to extend the life of the plants, because they can't just decommission now in the middle of challenges of load shedding. So they've improved the performance of those plants. So we have more of that also coming into the system.
We are seeing a series of changes that are all happening. And I mean, has some of the incentive to produce more solar power sort of gone away because load shedding is gone? Has the heat been sort of taken off Eskom in that way?
Not really, because renewable energy, the aim of introducing it was more on the objective of decarbonization rather than stability of the grid. Yes, of course, you do have some capacity coming in, but you always have to back it up. So the most important reason is really the diversification away from coal and environmental considerations. Because where you have battery backing it up, then you even have better certainty. So that there will always be a need to decarbonize.
And I presume then what this might also do is create a bit more demand for Eskom to meet. In other words, it gives them a greater financial incentive to produce more power from solar sources. If there's a long queue of people who want these deals, that'll help things along nicely.
Yes, because Eskom is likely, in fact, they are to an extent losing some of the capacity from the IPPs that are targeting these industrial users who want to decarbonize. So I guess it's a strategy for them to fight back for that market to be able to capture it.
Jose, thanks very much indeed. Jose Molesha is an energy expert. 10 minutes now to 7.
The Money Show, Stephen Grootes, is brought to you by ABSA CIB, backing the Ideas Fund by advancing capital to African infrastructure investment managers.
Well, several reports today and several conversations around what's happening with our magistrates, and they're asking for a 34% increase. Now, you might immediately look at that headline and go, what? Then, of course, you go a bit deeper into it and you listen to them and they'll say and they'll point out that our magistrates actually haven't had a proper inflation-linked increase for many years. They've been some years with no increase at all, some years maybe a 2% increase, and that's while inflation has been much higher than it is now. They'll also point to the fact that there is a commission, the Independent Commission for the, wait for it, Remuneration of Public Office Bearers. Why it's not just called for salaries, I don't know. And that has recommended that they actually get quite a big increase, and that's been sitting on the president's desk. It reminded me of how many things sit on the president's desk for quite a long time. I mean, the desk must resemble a forest. It took nearly 2 years to make a decision after it landed on his desk about the head of prosecutions in Joburg, Andrew Chauke. Eventually, he did suspend him. And this is the price, I suppose, of inaction. When you don't do something, whether you're about to enter business rescue or whatever it is, things only get worse. And I can't help but feel with our magistrates, this is one of those cases. Never mind how it must feel day after day after day to be making decisions in cases brought by lawyers who can be paid twice, 3 times what you're paid every day.
702.
702.
Stephen is on X.
At Stephen Grootes.
I look forward to your view on that on 011-883-0702 and 021-446-0567. Well, one of the most important sort of financial trends or dynamics at the moment is how the amount of money or capital that's been flowing to the US is beginning to slow. For various reasons. There are concerns about the longer-term health of that economy because of concerns about trade. But if less money is going there, where does the rest of it go? What does that mean for emerging markets? Sean Neetling is the head of investment at Morningstar, South Africa. Sean, good evening. I mean, if you go from 2012 till maybe 6 months ago, there was this huge amount of capital flowing into the US. The US economy grew quite strongly compared to most places, particularly the Eurozone. Some of that's reversing. What does that mean for the flow of money? Does more of it come into emerging markets?
Yeah, firstly, evening, Stephen, to you and your listeners, and thank you for having me on the show. That's a really good question. I think you positioned it, quite correctly in terms of 2012 and sort of almost, 10 plus years ago, we had this wave of liquidity, which was pretty much, only finding its way into U.S. markets and U.S. financial markets in particular. And that served to, largely, push up and prop up asset prices and particularly equity prices in the U.S. And what we've seen particularly, over the last 6 months or since the start of the year, is a bit of a reversal of that capital. So what you're seeing, for example, is people and investors allocating capital to, let's call it, less expensive parts of the world. So that includes developed markets outside the US. So we've seen money and capital flow into Europe and into the UK, which are just fundamentally a lot more attractively priced. And then you've also seen emerging markets, catch a wave of liquidity. And that's fairly broad as well. At the start of the year, you largely saw that being centered towards China. But as the year has progressed, you've seen, South Africa and other parts of that emerging market complex also really benefit from, again, investors just thinking a bit more deliberately about how they diversify their portfolios.
I mean, there's a lot of value in other places. People are suddenly looking for value in other places, and for the moment, they seem to be finding it. I mean, time will tell, but they seem to be finding it for now.
Yeah, I think so. And again, if you look at, I suppose, what's been driving markets for the last couple of years, it's very much been sentiment. There's a few acronyms which are being thrown around. TINA is one of them. That is basically there is no alternative to the US. And there was a lot of almost fear of missing out in terms of not allocating there. But what you really see now, again, is this discernment starting to come from investors where they're starting to look not only at the next couple of months, looking on a 1-year view, 3-year view, 5-year view, how should they really be positioned in an environment which is a lot more uncertain than what it should be? So there's a fundamental piece to that in terms of, I suppose, how different assets are priced. And then also with the new presidency, in the US, I think that administration, there's a lot of noise and a lot of uncertainty that comes with that. So investors are pretty much looking at how to diversify their bets so that it's not too asymmetrically skewed to one specific market and one specific region in the US and North America.
What does that mean for the dollar, Sean? Obviously, are you joining what is a sort of growing group of people who suggest it's just going to continue to weaken?
Yes, Stephen, that's a really interesting question. Look, I think on all metrics, the dollar is particularly expensively priced against a wide sort of basket of currencies. So even before you had this uncertainty around trade, when you look at just the fundamentals of the dollar, at Morningstar we did think it was quite expensive. I think the challenge that you have with the dollar is that it still takes up such a large portion of global trade. It still serves as the almost de facto reserve currency of the world. And again, you have seen some of that frost come off the dollar. So it's about 10% down, maybe just more than that on a year-to-year basis. So again, just fundamentals would suggest that the dollar continues to weaken. And again, that's largely based on this rotation of capital as well. So, if you're selling dollars, you're buying something else. So those currencies and emerging markets in particular have benefited from that. Let's call it the rotation away from the US dollar, I suppose, into currencies where the assets are more attractively priced.
I have no idea what's going to happen next, but you mentioned acronyms. There's also the taco trade. Trump always chickens out. Things could change quite dramatically there. We could wake up tomorrow and have a completely different sort of set of trade policies. Is this a longer-term trend, do you think? The US has a huge amount of interests that are absolutely invested in keeping the money flowing to them.
Yeah, Stephen, that's a great question, and I think if you look at, I suppose, Liberation Day and post-Liberation Day, those announcements, when you saw markets and particularly U.S. markets sell off in such a pronounced way, those Liberation Day announcements and those tariffs largely spooked and surprised the market. So I think what you've seen from that is, listen, in this type of environment, what you don't want to do is have your bets all hedged and I suppose lined up in one direction. And what you found, for example, from a Trump presidency is, fairly consistent with what's expected, is that he is a deal maker. So I think, it's the politics of deal making and pretty much getting people to the negotiating table. And I think there's still a lot of uncertainty in the market. But what we do know, for example, in the way that Trump negotiates is that he is going to use, I suppose, this approach where it's almost particularly punitive and onerous up front. And what he wants is for different nations to come to the table and to negotiate. So you've seen deals, for example, being struck with the European Union. Again, that takes some uncertainty off the table, and it does help investors. But at the same time, it's still a much worse position than what the European Union was, for example, in 6 months ago. The China deal making, those negotiations are still ongoing. So I think this is the environment that we're in, where it's going to be politics, where it's coming to the negotiating table. And ultimately, that's the nature of a Trump presidency that investors are going to get accustomed to.
Sean Nettling, thanks very much indeed. Head of Investments at Morningstar, South Africa. Coming up, don't forget personal finance. We'll talk about the good, the bad, and the ugly of where we are right now. Dr. Rutendo Hundingwi, and we will look at the irony of climate. You with The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, backing the Ideas Fund, by advancing capital to African infrastructure investment managers. Plenty to come in the next little while. We will be talking about the green economy. We will be talking actually about something that happened in Durban. We'll be looking also at some of the things happening on our continent with Rutendo Hundingwi, and he's actually already here. in personal finance this evening. We'll be speaking to John Manyike, the head of financial education at Old Mutual. What he calls the good, the bad, and the ugly about your personal finance. There's some optimistic trends, but there are plenty, unfortunately, that are a little bit less than that. All of that to come on The Money Show this evening.
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
Well, a WhatsApp message from Newton on 072-702-1702 saying, what are the magistrates going to do with the money? Live more luxuriously than they already do. And that's, of course, about their request to the president. They've gone to court now. I think the case was heard today for that 34% increase that's been recommended. So, look, everyone's going to have their own definition of luxurious, Newton, but I think a magistrate to start gets something like 1.5 million rand. Now, that sounds like a lot. Bear in mind what an advocate can get. I mean, we're talking 4-5 million rand. Now, you wouldn't really see many advocates in a magistrate's court, but there are attorneys that make an absolute fortune. So I hear your point, but there are other issues that come with it as well. Your views, 011-883-0702-021-446-0567. Many, many years ago when I was a student in what's now Makanda, we were talking about a magistrate for various reasons and being quite critical of them. I was in a restaurant with some student friends, and it turned out that the waiter was the son of a magistrate, which had had a brief relationship in court with one of the people I was standing with. You'll have to work that out for yourself.
702. Stephen is on The Money Show.
6 to 8 p.m.
The green economy on The Money Show. You may remember that fascinating story, that case brought by the insurers of Toyota. They lodged a court action against the KwaZulu-Natal provincial government from the flooding that happened in the province back in 2022. It caused a huge amount of damage to Toyota's assets, to their factory, to their plant, disrupted their production as well. Tracy Davies is the executive director at Just Share. Tracy, hi. You suggest actually there's a bit of an irony, quite a deep irony in this because of Toyota's track record in climate issues.
Yes. Hi, Stephen. And yes, absolutely. I think that on the papers, it seems like a fairly straightforward case. You know, there was a lot of rain and there was some infrastructure that was allegedly not maintained properly. As a result, Toyota suffered a lot of damages, and now its insurer is claiming those damages from government entities in South Africa, of course, Transnet and eThekwini, etc. But one of the things that the kind of point that I was making here was that the floods in KZN, which were, the worst in South Africa's recorded history, they've been carefully studied by scientists, and they have, in fact, a 3-year comprehensive study by a group of people at Wits University in collaboration with various international partners has demonstrated that the rainfall during that storm of 11 to 12 April 2022 was between 40 and 107% heavier than it would have been in a non-climate change impacted environment. And so the damage caused by those floods was really intensified by climate change. And both Toyota and Tokyo Marine, its insurers, are significant contributors. Well, Toyota is a contributor to the climate crisis. Tokyo Marine rather is exacerbating it. And the reason for that is that the emissions from Toyota's vehicles account for around 1.5% of the total global emissions. That may not sound a lot, but it really is a lot. So Toyota's products emit more every year than the whole annual emissions of Australia. And Tokyo Marine underwrites a lot of fossil fuel projects. So the point here, and it's a little bit of a convoluted argument sometimes to make in a few moments, but the point is that the floods were exacerbated for reasons that the so-called victims here very much contributed to.
I mean, it's not just Toyota, right? There are other companies that will find over time that their facilities, their plants, their production is affected by flooding, that they will have played perhaps a role in helping to create. They will have a climate record. I mean, it's not just Toyota in this space.
Of course not. This is the focus here is on Toyota because it's such a particularly unique piece of litigation. We have a foreign insurance company suing local government entities in a foreign country for damages caused to an entity that insurer was underwriting. But of course, this is, this kind of scenario can be replicated almost anywhere. And it really is a particularly important and scary case because, these damages are going to happen all the time, all over the world. And if corporate contributors to the climate space start suing governments for damages, that has huge implications for the fiscus, for taxpayers, and for those governments' ability to actually spend money on generating the resilience that we need to be able to survive these floods. So, you may well say that, you may well assume, given the country we live in, that the infrastructure that the litigation refers to was poorly maintained by the various government bodies. But at the same time, you could also argue that they could never have anticipated the severity of these floods. And so even if the infrastructure was well maintained, the damage would have happened anyway. So it's much, much more complicated than it looks like, when you read a simple summary of the case.
Okay, all of that's going on. Do you think this is going to be enough? I mean, the Toyota is just one example. There'll be others, I'm sure, around the world. I mean, I think of the intense weather that you get in certain parts of the US, which is much more intense than we get here historically for various reasons, where they are geographically, and will only get worse. I mean, some of Florida, I think it is sort of uninsurable for this kind of thing. It makes Durban, it really is quite serious. And do you think this is going to be enough to get companies to understand and to realize that changing their behavior is certainly, if we look at this example, in their own best interest?
No, very much doubt.
I see you have some experience of the world, Tracy.
So yes, I don't think it will be, and in fact, this case is a clear demonstration of the fact that kind of corporate self-awareness is a long way from existing still. Maybe it's cynicism or hypocrisy on their part. I don't know, but the climate litigation, this kind of litigation is enormously, it's happening all over the world. And litigation, what we're used to hearing about is litigation against fossil fuel companies. So, the big corporate emitters. So there are many states in America, various, not hugely familiar with all the details of their different bodies, but state bodies in America suing corporates for climate impacts. On the states themselves, that the states then have to pay for. They have to pay for the damages which are actually exacerbated or caused by Chevron and ExxonMobil, et cetera, et cetera. And so this is a kind of reversal of that. It's the corporate suing the state, which is really fascinating. But what is interesting is that it's becoming much the science around attribution, which is how you allocate blame or responsibility for climate damages, is becoming much more exact. So you can now draw quantitative linkages between individual emitters, so individual companies who are causing climate change, and particularized forms of harm. So in America, particularly given what a litigious society it is, you can expect to see enormously more of this kind of litigation against corporates, by states, by individuals, etc. But this really does reverse it's the first time I know of, and certainly others I've discussed with know of in the world, where you've got the opposite. You've got the corporate suing the state for damages in what is essentially a climate impact case.
Tracy Davies, thanks very much indeed. It's fascinating. Executive Director at Just Share.
The Money Show, Africa Business Focus.
The Africa Business Focus is brought to you by Absa Business Banking. Talk business with the bank that gets it. Absa Business Banking. Dr. Rotendo Ndungwi is the founding director at Tribe Africa Advisory, also author of the book Rumble in the Jungle Reloaded. Rotendo, how's it? We were looking at this story from the kind of Nedbank angle. The EcoBank sale is $100 million. Nedbank have sold just over 21% of it to Bosque Investments there from Cameroon. I mean, it's a fascinating deal, and the people behind it are very interesting.
Very interesting indeed. And Stephen, a good evening to you and to your listeners. Yeah, and I think, as I always say, Stephen, one man's threat is another man's opportunity, or man's opportunity is another man's threat. Nedbank has pulled out of EcoBank primarily because of the Nigerian market, obviously providing a bit of risk and a bit of uncertainty. And a lot of South African clients that Nedbank was servicing in Nigeria or West Africa have pulled out. So that's some of the reasons highlighted by their CEO. But that 21% has quickly been swooped out by Bosque Investments, which is owned by Ellen Conchao. Ellen himself is a Cameroonian. So they've made the investment. He's actually based in Monaco, Steve. So he's not battling, let's put it lightly. But they see huge opportunity with regards to EcoBank. The 21% is also going to be used as part of the whole strategy as Nedbank goes intensively investing in AI, Google Cloud. They're currently in about 33 countries, and they've recently got some major investments through Eurobonds of $625 million over the last year. So definitely, although Nedbank is putting out is not a great thing, but for them, it's a great opportunity with regards to Bosque Investments jumping in, Stephen.
And then intra-African trade, and we've been talking about it a lot. Could intra-African trade sort of save us from U.S. tariffs, et cetera, et cetera, et cetera? It has grown $221 billion. I mean, you can't sneeze at that.
You can't sneeze at that. I think in 2021, Stephen, when inter-African trade first started off in terms of AFCFTA, in terms of the whole initiative, it was about $189 billion. So obviously between then you've had COVID, you've got global geoeconomics and politics and wars happening. But it has grown by $6 billion. The key drivers pushing for this growth, Stephen, specifically in terms of when you analyze this in a bit more with a bit more depth, is Nigeria. Their inter-Africa trade has doubled from to 18.4 billion. And DRC has also intensively grown by 11 billion. So there's a lot of activity that's happening there, Stephen, with regards to inter-Africa trade. Obviously, the Africa Continental Free Trade Agreement, a big initiative. Currently, only 24 countries are trading under that. But when it started off, it was 0. So, for me, Stephen, being the eternal African optimist, I look at it as a glass half full. 24 out of 54 is better than 0. But again, talking to the opportunities and the growth, and African Bank as a trade bank is probably estimating that in the next 5 years, they want to invest about $40 billion, double what they're doing now in terms of trade finance. So hopefully it's a step in the right direction, Stephen. But a journey of 1,000 miles begins with one step, and we've taken a big step in that direction as Africa.
No, sure. And then Angola, they're seeing some growth in gas. Their oil output is flatlining. They're optimistic about gas, though.
Yeah, so I think the challenge here, Stephen, is that, or the opportunity here on one side is Angola, the second biggest supplier of crude oil in Africa after Nigeria. It will probably make, Stephen, about $5.6 billion with regards to exports of oil from an Africa perspective as Angola itself, but still a fraction. But in order to diversify the economy, and we've seen this again, Stephen, with countries like Botswana, where they've obviously for a period of time the economies have relied on diamonds. And they want to diversify the economy. So here's a case in example. Angola is now focusing on gas. The company itself, Azule, is 50% owned by BP, Shell, or BP PLC, as well as the Spain ENI company. So they are making significant investments with regards to oil and gas. Angola expects to invest about $60 billion, Stephen, in the next 5 years in oil and gas, in the gas specifically, and they see there's a huge opportunity there. It's estimated, Stephen, and this is a scary number for you, that there's 1 trillion cubic feet of gas having 100 billion barrels of compensate. So there's a lot of gas that is there. But again, I think the key thing to highlight here is that Angola is diversifying and trying to lean off just depending on oil as a source of income. And I don't know, Steve, in previous meetings, we've chatted also about Zambia and the partnerships is done with Angola. There's also the Lobito corridor that's happening along that strait. So there's a lot of stuff that Angola is doing. And in The past all used to be around Senegal, which was linked to the former President Eduardo dos Santos. So you can see, Stephen, that I think Angola as a country is probably making a lot of initiatives. I've seen this in Ethiopia, you've seen it in Angola. And I think it's the right thing to do in this day and age when the world is demanding a lot of things.
Yeah, and Rutendo, the AU wants the world map to properly show Africa's true size. We're too small on the map, right?
Indeed, size does matter in this case, Stephen. And African Union, when I look back at my days in geography at school, Stephen, when we used to look at the map and you see Africa is small and then the rest of the other world is small, but because we're in the center, it wasn't a big issue. But from a geographical perspective, Africa is actually probably the second biggest continent. And the person to blame, Stephen, and I'm going back into a history, I'm really challenging you, is the 16th century. His name, I think the name is a cartographer, Gerardus Mercator. And he designed the map in such a way, the global map in such a way that South America, the North America and the poles and Greenland, which is the most exciting place in the world. I've never been there, but I'm assuming it is, looked very big. And Africa was small. So there's a group in the UK and I think in Europe that have gone to the power that be and said, guys, we're too small in terms of from a physical perspective and how it's represented. It's affecting our education. It's affecting our influence and basically every perception that is there. Google, funny enough, Stephen, has actually diverted to give people the option of the three-dimensional Google map, but you can still go back to traditional map. But the argument, Stephen, that is out there is that, by positioning Africa correctly and in the right place, the right size, hopefully 90% of the problems that we have as Africa will go away when people realize how big and geographically strong that.
I think that might be a little optimistic, Rutendo. Thanks, Dr. Rutendo Ndwingwi is the founding director at Tribe Africa Advisory and author of the book Rumble in the Jungle Reloaded. Greenland has a few problems and they're oversized at the moment. Running a business, Absa Business Banking gets it. The pressure, the pace, the risk, that's all on you. You need more than banking. You need flexible funding, real-world tools, and sector expertise that shows up when it matters. But most of all, you need a banking partner that gets it. So talk business with Absa Business Banking because they get it. Your story matters. Absa is an authorized FSP and registered credit provider. T's and C's apply.
The Money Show, Stephen Grootes, is brought to you by Absa CIB, backing the Ideas Fund by advancing capital to African infrastructure investment managers.
The Money Show.
Personal finance.
John Manyike is the head of financial education at Old Mutual, and he's in for Warren Ingram this evening. He's also going to be talking about quite an interesting report, the Old Mutual Savings and Investments report, that talks about the good, the bad, and some of the ugly about where we are at this particular time. I suppose, John, good evening, and thanks so much for coming in. I really appreciate it.
Thanks for having me.
My first thought was, it's not just bad and ugly. There is some actual good news.
No, there is.
It's been a little while since we last had some.
No, absolutely. Sometimes I guess because we watch the news and every time we watch the headlines and it's always something gone wrong. But trust me, when you look at the savings and investment behaviors of South Africans, there are some positive things there, and that's what the research is telling us. For me, it was quite encouraging for me to see that South Africans actually have a forward-looking posture. And that's why we said, look, maybe let's talk about the good, the bad, and the ugly, so that we have a proper mixed bag, of where we are as South Africans. Yeah.
So there are lots of reasons why we sort of lack some of the confidence. We look at the headlines, there's corruption, there's money wasted there. I was looking at it in Sunday newspaper the other day, and how many times was the headline billions wasted? It's just all over the place. But you're suggesting that actually quite a lot more people are earning more money than they did last year. It's quite a big percentage.
No, absolutely. So I think this is the good side of South Africans. Don't let anybody fool you. South Africans are very optimistic. South Africans are very resilient. Even in a very challenging economic landscape, South Africans are very creative, and I think hopefully we'll share some of the insights on how South Africans are doing this. So I think the fact that about 44% of South Africans are saying they're actually earning more than what they were earning last year. We take it for granted that companies are offering wage increases above inflation or not. Trust me, if somebody gets a 1.5% increase and you ask them, did your salary increase? They will tell you it didn't, because they know what it means. There's a net effect, of course, taking tax into account. About 57% of South Africans are saying, actually, we have less debt compared to the same period last year.
I was amazed at that.
Yeah.
I mean, that's a lot less debt. And I mean, I don't know whether that's two-pot, whether it's something else, but why, how are people able to pay back debt in this economy? I mean, is it lower inflation? And somewhere, I haven't even used the phrase interest and rate yet.
Yeah. I think it's a combination of things. I for the first time, and what I saw in this report for 2025, that South Africans are now a lot more proactive when it comes to paying down debt. They actually make arrangements. I'm not saying it's all South Africans, but there's a sizable number of South Africans who are starting to engage their creditors to say, listen, I want to make an arrangement there. They are a lot more proactive. That's why we're seeing about 57% of them saying, well, they have less debt compared to the same period last year.
Could it be also just a function of, I mean, for a long time, you and many other people have been, I say this as politely as I can, trying to shove financial education down our throats.
Yeah.
I mean, could it be having an impact maybe? At schools too, by the way, now.
It is certainly ticking in the right direction. And it's the work that the financial services industry is doing, and banks. And, I wish there could be more. But clearly something good is happening in South Africa. And for me, that's very positive. Well, we also saw that 22% of household income actually account for savings. You might not pick it up when we look at the national savings ratio, because I mean we use a different formula there, because you're looking at GDP, income versus consumption. It doesn't give you a true picture, but it may as well be because a lot of South Africans still believe in stokvels, and you'll be amazed that even your affluent South Africans are still believe in stokvels. They will actually belong to more than one stokvel. So generally, I think that's a good sign for South Africans. Again, I think the whole idea of having a secondary income is also encouraging from a South African point of view. I think when you look at the number of people, I'm talking about working South Africans, who's saying, actually, I've got an alternative income. In fact, 1 in 5 South Africans earn a rental income from their primary home. Now, those things are good. I mean, we can't always be focusing on the negative. I mean, sometimes we just need to surface some of these positive things.
I mean, that's also the culture of the hustle. So there was a time when the economy was dominated by big companies. You worked for a big company. There was probably someone in the house who was a mine worker. Things went from there. Now there's maybe a little bit more of a kind of, I've got to do this for myself.
No, absolutely. But funny enough, it seems to be a lot more prevalent amongst young people. Young people between the ages of 18 and 29. I mean, 75% of them actually saying they have more than one income. But when you go up the higher age brackets, that number actually declines. So at 75% of young people between the ages of 18 to 29, when you go to 30 to 49, it goes down to 61%. When you go 50 plus, that number drops to 31%. So what it tells us here, Steve, is that young people, I don't know whether I should say it's social media or, the other ways that they are able to generate income. Maybe they're influencers there, but young people actually have secondary income. That's encouraging, especially when you consider the fact that our unemployment rate for young people sits around 54%, which is very high. Now, what that means also, Steve, is that if young people enter the labor market at a very late stage, they cannot save adequately for their retirement. Now, when they start having a secondary income, it gives them the opportunity to start creating wealth, because they start with their backs against the wall.
We're talking to John Manyike this evening, the head of financial education at Old Mutual. Are your personal finances at the moment, are you feeling good? Are you feeling bad? Are you feeling ugly? The ugly, by the way, does include sports betting, so we'll talk about that in a little while. But how are you feeling? It'll be good to hear voice notes from you tonight. Let us know how you feel about your finances on 072-702-1702. You don't have to give us your name if you don't want, but also your comments and your questions for John on 011-883-0702 and 021-446-0567. When we talk about the growth in financial literacy, which I think must be playing a role, and I do think, schools have been doing a pretty good job. I mean, I learned nothing about money at school, nothing. So quite a lot of people are now valuing the financial education they get from institutions, and institutions obviously need to manage that quite carefully. They hold people's financial futures in their hands.
No, absolutely. And I think what stood out for me when we started looking at people's confidence in, financial literacy, the growth of financial literacy in general, but also about a number of people are starting to believe in financial advisors. I think we saw that number go up to 45% this year, which is encouraging. Because, look, when you have a legal problem, you speak to a lawyer. When you have a medical problem, you speak to a medical doctor. But I think it took a while. It may be because of the trust deficit that exists perhaps maybe in the industry. Of course, we've had some bad apples. So at times it tends to tarnish the image of the sector. But the confidence is coming back again, and people are starting to believe in speaking to financial advisors.
Very important, that whole idea of speaking to an expert. All right, we do need to look a bit at the bad. And despite this optimism, I mean, there's a sort of underlying, when I say the nature or the structure of our society means that financial stress is pretty persistent. There's a large number of people who are very, very stressed about it and have been for quite a long time.
No, it's true. I mean, we see about 38% remain highly stressed. And women, report that they've got lower satisfaction when it comes to their financial situation. And you can understand that. We still have the issue of pay parity, I think it's taking some time, but of course there are some institutions or employers who are doing good in as far as that. But generally, women feel less satisfied compared to their male counterparts. Yeah.
Is it also about the stress of seeing your child go hungry? And I'm not saying that a man isn't stressed by that, but we know, I think the figure is 38% of children in South Africa grow up in the same house as their father. So I mean, it's woman-headed households in the main, and they would feel that stress very acutely.
No, absolutely. But also, women tend to be a lot more challenged because, remember, they at times when they conceive, they have to they take maternity leave, and of course, because they are the primary caregiver. So whenever there's a problem with a child, they are more likely to be out of work for a couple of days. It could be family responsibility of the child. So now you find that from a career progression, sometimes in some instances they get overlooked because of having to deal with these big responsibilities and having to juggle around.
We talk about the levels of debt coming down, but there's still a very high percentage of people who are worrying about debt quite a lot.
Look, it's still coming down, but unfortunately, it's still there. What is concerning, though, I know we may, if we've got time, we may get there. What is worrying, though, is that there are people who are 19% of them who are borrowing to go bet. I think when it comes to, it's going to take a while, but at least the graph is pointing in the right direction. We're seeing that reducing over time.
There's also, of course, we know the nature of our families because of how our society is, that most people are supporting children, and it's not, one or two children. It's often their children of a sister, maybe a child of another relative that needs help. And that really does, take it from me, children are expensive. But it really does add to the concern. It adds to the financial burden.
No, absolutely. We still have quite a number of people who are sandwiched between having to provide for their immediate family. The last time I said this, somebody from Labour challenged us, but no, comrade, when you say family in culture, family means everybody. But for simplicity, when we say immediate family, we're talking about a person and their spouse and with their children. But the minute you start helping your brothers, your siblings, your extended family, your uncles, your aunts, yes, you're a family. But this is why some people, or especially amongst young people, tend to be a lot more resentful about having to provide for extended family, because they feel that they cannot create generational wealth early enough. I mean, because they have to deal with this. But that's the reality of where we've come from. I mean, that's the reality of how we're socialized. Yeah.
And then people are also dipping into their savings, so their savings are getting weaker over time.
Well, we've seen that, Steve, with even with two pots, people cannot resist the temptation of dipping into savings, even if you're told this is your future money, but you do have an option to take it, but it's for emergency. But no, we will still dip into the savings. Although I think when we did our own surveys with these occupational retirement funds, we found that 45% of people said actually they withdrew from their two pots in order to pay off debt. I think we need to continue to monitor that. Is it really debt, or is it the other debt, which is Mashonisa?
011-883-0702, 021-446-0567. How would you rate your personal finance? Your voice notes tonight as well on 072-702-1702. Your questions for John Manyike, the head of financial education at Old Mutual.
The Money Show. Personal finance.
John Manyike is the head of financial education at Old Mutual, in for Warren Ingram tonight, talking about the good, the bad, and the ugly about personal finance. Old Mutual have been doing that big survey of theirs. It's 8 minutes now to 8 o'clock. All right, John, we do need to talk about the ugly and online gambling, the unbelievable, the explosive growth in online gambling. The thing is about why people are gambling is what scares me.
No, absolutely. Look, I think a lot of people, when they start, they say, well, it was just for fun, it was for entertainment. But then you have others who are saying, well, actually I'm gambling because I need to cover some expenses. I mean, here we're talking living expenses, and although some say we're doing it to make a living, and but it is concerning that about 52% of working South Africans are saying, well, they are gambling. Look, let's acknowledge firstly that the gambling sector, it does create jobs. Let's give them credit for that. They do contribute to GDP. It's not to say that we need to discredit the sector. We're just saying that if it's uncontrolled, it can become a problem, because what we are seeing here is that 19% of gamblers said they often borrow, or sometimes often borrow money in order to fund the gambling. 24% of them said, well, they found themselves in financial difficulty as a result of gambling. We do know that if we start looking at the other social impact of gambling, it does get worse. It can even get to a point where some people actually commit suicide. It is certainly something that we need to continue to monitor over time. Yeah.
Yeah, look, I mean, I think there'll be demands at some point for Parliament to act on this. Economic distrust. We're talking really about confidence in our economy, and if you look at all of the official figures, I mean, both Standard Bank and we had them on the Money Show yesterday. What are their names, man? ABSA said that they expect economic growth of just 0.9% at the moment. I mean, there are good reasons to not really have a lot of confidence in our economy.
Yeah, look, for the longest time, I mean, we've been sitting at just under 1% or sometimes 1%. If the economy was a person, I'd say we've been in ICU for the longest time. There's pulse. That 1% means there's still pulse, but we're literally feeding on oxygen. We from an economic point of view. So there's still an issue with that, but overall, I mean, we still have South Africans who believe that things will turn around. I guess maybe one of the contributing factors is that, even when you look at the political side, the fact that generally people may have seen that the the ruling power may have lost power, but it had to find a political partner. There was some skepticism about GNU, but the fact that even though there are challenges here and there, and I use the word taking, I don't know if you're familiar with that term, it means shaky.
Yeah.
So even though it's taking, but the fact that the center is still holding, I think that gives, I believe that it gives South Africans some confidence that, look, the center is holding, so things are still moving along. So, but overall, the confidence in South African economy is still low at 42%. Yeah.
And I mean, we see that with the number of people who are sort of trying to get money out of the two-pot system, their pension fund. They feel that really, I mean, I don't think people are taking from their long-term savings because they want to. That people have been putting that money away. They know what it's for. Partly because of the financial education that we've seen. They're taking it out because they feel they have no choice.
Yeah, look, but we also need to appreciate human behavior. I mean, if I say to you, Stephen, I'm going to leave 10,000 Rand on the table, don't use it.
Yeah, no, sure. I get you.
Yeah, a lot goes through your mind, you know. So even if I say this money is for what? I mean, like in this case, we say it's for emergencies, but we're finding that people are using the money anyway. But I think some of the people who have actually accessed from the two pots early, they're now appreciating the fact that well, not all that money will come to them. The SARS will have to take something. There are those who are saying, no, I'm not going to withdraw this money for the second time because I can see that some of it actually goes to SARS, so I might as well wait. But that remains a challenge. We still have a sizable number of people who come in for the second time in the new financial year, actually withdrawing from the two-pot savings.
Overall, there's quite a big gender gap. And what you really start to see is that men, I mean, maybe just naturally more confident, but actually the financial picture for women is quite different.
It is. And again, considering life expectancy, women are more likely to outlive their money. They outlive their male counterparts anyway. So, but I mean, it's just unfortunate that, these pay parities and tend to become a bit of a challenge. And with all the challenges that we referred to earlier, let's hope things will continue to improve.
And John Manyike, thanks so much for coming in. I really appreciate it.
Thanks for having me.
John Manyike is the head of financial education at Old Mutual. The good, the bad, and the ugly of personal finance at the moment. And there's so many things to discuss, I think, around online gambling. I don't think that story is over yet by a long way. I think there are going to be more conversations to come. Don't forget that they're licensed generally by the provinces, the gambling boards. And I suspect that at some point there's going to be pressure on them to crack down just a little bit. So much money seems to be flowing through those at the moment. And in a way that, even if it is entertainment, may not be productive. They are going to be all sorts of conversations, I think, that are going to come through around that.
702. Stephen is on The Money Show.
6 to 8 p.m.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, backing the Ideas Fund by advancing capital to African infrastructure investment managers. Well, the U.S. market's mixed at the moment, but trending down. The Dow Jones is flat, really. It's up 0.02. The Nasdaq is down 1.37. The S&P 500 is down 0.56. We were talking earlier about how capital is no longer flowing to the U.S. in the way that it was just a couple of months ago. Now seems to be flowing away from the U.S. A bit of a switch. People are diversifying as quickly as they can. Plenty to come tomorrow. Don't forget Shapeshifter as well tomorrow evening. Looking forward to that conversation as always, and of course we'll have all of the main news for you of the day and the latest from the currency manipulation case. It'll be day 2 at the Constitutional Court tomorrow. Good evening. Thanks for being with us on The Money Show. It's 8 o'clock.